Hello?
Yep.
Yeah, okay. Now we go for the last third session here. Third session. After this third setup, we will go for the GU setup as well. Okay. You look for the GU setup as well. GU means British Pound US dollar setup. Okay. So yeah. So now Friday is done, Thursday is done. Now let's go for 17 May, which is Wednesday. Okay. Wednesday, right? So first thing you're gonna do on Wednesday is to mark the London Open. Can you tell me when is the London Open? 3 p.m., 3 a.m. New York time, 3 p.m. Malaysian time, right?
Yep.
To mark it. Okay. Why I ask you to mark this all? Because this will help you to determine the bias and everything. So it's very important that you do the Wyckoff semantics and you do some annotation on your chart. Okay. So London Open is here. Okay. And now we will mark the New York Open times. So what are the times? 8:30, 9:30, 8:30, 9, 9:30, 10. Got it? 8:30. The second one is 9. Sorry. 8:30. 9. 9:30. 10. Okay. Just check it out. Okay. Second step. Mark them. Hold on. Okay. NY Open 1. NY Open 2. NY Open 3. NY Open 4. Okay. After this, you could look for, on a 15-minute time frame, you look the chart. Look the chart. From London Open, right? Backwards. Okay. Just move a little bit, okay? I advise you to look the London Open and the little bit portion of the London Open afterwards. Okay. For example, start analyzing at 6, 7 p.m. half an hour before, 15 minutes before this one. So you will see this entire move, right, on your chart on 15 minutes before this one. So can you get an idea what kind of structure is this? Do you have high volume here?
No.
Okay, here the high volume was last high volume was not near the lows, right? So this can't be what?
Selling climax.
Yeah. So this can't be selling climax here. So what do we have here? Structure.
Redistribution.
Redistribution. Very simple, right? Yeah. From this low. Okay. High one. Registration point is here. Okay. Now just extend these lines. Just extend these lines across and like past these lines as well, right? You make sure you cover all of these portions when you extend it. So this becomes your major line. Okay. All right. So this becomes a redistribution pattern, as I told you. Because whenever there is a accumulation, okay, then there will be high volume here, and then you can draw the channel to see where the high volume occurs. But obviously, doing the channel won't help. Same situation, right? The price never reaches this, reached here, and then it kept on going down. Does situation repeat here?
I think it's very similar.
Sorry?
Looks very similar.
This was? What did you say?
Oh, I'm not sure if this was the one we just did or not.
Was this the one we did? I think it's the one we
Seems
did.
like it.
Yeah, but I'm thinking why it's repeating.
Yeah.
Let me see. On Thursday, what happened on Thursday? Anyways, I think we have done this already. Let's go for Tuesday then. Looks like it's same thing we have done. Okay, now let's mark the London Open. Tuesday, 3 p.m. Okay. Yeah, this one is right. London Open. Okay. And how about NY Open? At what time?
20.
8:30. 8:30. There's a news, unfortunately, on 8:30. And NYO01. NYO2. Okay. NYO3. And then we have NYO4. Okay. Okay, all right. Now let's quickly determine the bias here. Before London Open, what's happening here? We have this portion here. This is available. Yes. High point on the bullish point, yes. Very high point, right? So once before London Open, what do we see here? On the lows, very high volume, right? So this is, of course, this is buying climax, selling climax, right?
Right.
Right. So we will mark the line right over here, selling climax. The first thing we identify here. And it's a very, very good selling climax, actually. It did went up, shoot up. Okay. So we have a selling climax here. Okay. After selling climax, because why do we call it this selling climax? Because of high volume here on the lows, right? Now draw the structure. Okay. This high, first higher low, right? The first higher low was from here.
Lower high.
Yeah. Right. So this is what, when we have this kind of structure and then fast recovery, you can see this one and this one. High volume, and then we call this as V bottom accumulation, right? So there are two kinds of accumulation. One kind of accumulation is where you will see oversold, or like SOT oversold, or like overbought, SOT and then buying selling climax, or you will see oversold and then buying climax. Or the other accumulation is when you will see just a V, just a sharp move down, a very sharp move down. Okay, a very sharp move down and then quick reversal. Got it? We call this as V bottom. Got it?
Mm.
Got it? There are two kinds of accumulation. One is this normal one, okay, with this SOT and channel drawn on and whatsoever. One is just, we just break out of the channel, V top, okay, sorry, V bottom, and then reversal. See, it's forming a V. If you can see on this chart, it's forming a V. Okay. So this is selling climax. Okay, the price went up. And of course, if this is selling climax, this is what? The high point here. AR. So yeah, we know one thing. What is the bias here? Major bias. Very simple. Bullish. We have drawn AR, we have drawn this one, right? Now let's see. We go to the 5-minute time frame and we further analyze it. Okay. Yes. So price went up, and after this selling climax, and this after selling climax, this is AR selling climax, and this is also what the price is.
Oh, PSY.
Yeah, LPSY, yes, of this move, but basically this is a selling climax here. All right, and what do we see here? The price again came back here. We wait for first New York open, which is on 3-minute time frame. Okay, it's very simple. If we can draw any channel, we will draw any channel to identify the immediate immediate bias. Okay, so here we have, these are equal highs. Our first low actually started from here, right? Channel here, right? And this one
Right.
here, what do we have here?
Oh, oversold.
Very high volume, right? Comparatively high volume, and then price reverse. So this becomes what? Very simple. Oversold plus buying climax. Very simple. Sorry, selling climax. Right?
And the secondary test also.
Yeah, of course. This is, of course, this one here, and then we have AR, which goes to the upside. AR, okay. And this AR also forms what? It crosses what? Jump across the creek, right? It has sustained volume, average volume. The volumes are actually, if you just zoom in here, you will see the volume are increasing slightly, right? Slightly increasing as the price goes to upside. Got it? And then the news came here at exactly 10:30. The news came. So obviously you should watch. You should look over to the calendar. Okay, like Forex Factory calendar. If you go to the Forex Factory calendar, you will see the major news coming on Tuesday. Yes. Very, very major news. Coal retail sales in these two. Can you see? Major news. Okay. And we have the news here from CAD as well, because you know the price of CAD and USD, they both impact gold a lot. Got it? So as I've explained before, so we'll go back to the chart here. And what do we see here? The news came, let the news came. We know that the news coming at 8:30 p.m. Let the news come here, and you see a very huge volume. Okay. At the spring level, the price recovered here. And then after this, the price recovered here with the increasing volume. Right? So yes, it's a very simple one. The bias, we are in the direction of the bias here, stop loss here. Bias here. Okay, my first target would be this one here. A little bit higher, 2R. Okay, finish. Got it?
Right.
Yeah. And as I told you, when we also make a high over here. When we have these kind of situation that the price reject high above as well and below as well. So as I told you that it's better to draw these two lines, horizontal lines, to monitor the situation here. Okay, this line and this line are almost equal, so you don't need to draw it. Okay, but here we do have a seller here, right?
Yeah.
Right.
We do have a seller at this point, and we do have a buyer at this point. So that's why we'll draw lines on both sides. So this is one short. This is a V. You can see this is a V top what? Distribution. V bottom accumulation. Got it? So we have accumulation now and distribution again. We have both accumulation at this point, both distribution. Short term, obviously, because the major one is still, the major bias is still bullish. Okay, the short term can be. Now what happened here? Due to this one here, okay, And this was a very high one, right? More higher than the previous one. If you go to the 15-minute time frame, you will see this, right? This V-top here, obviously. And then this reversal. What will happen? Okay, the price makes an upthrust here, and then you see the price goes down. The whole direction changes after this news. Okay, our initial major bias was bullish, but it then became bearish. But as we know from this point, that our major bias is bullish, and our other bias is also is bearish. So where we are bearish, we are bullish here, we are bullish here, we are bearish here. Got it? Right?
Mm.
Okay, now we wait for the second entry. This is done. What happened? The spring formed here. You see? This whole move here, the price came down. It's what? UT. Right? Upthrust. This is again test of upthrust. Now NY open here, test of upthrust here. Now price came back here, okay, and then reversed. So you can get an entry. Now where would you take an entry? Can you tell me?
No demand.
This one here?
Yeah.
Now, the point is it did not
closes
reach the
on the low.
Yeah, of course it closes, but sometimes we are waiting for this and we don't get this, right? Then what can we do? We'll just miss this move. And then, yeah, you are right. Here we can take the entry here. We have second entry here. The price did move in our favor, but sometimes we are waiting for the price to reach this reference level, because first reference level is UT, this top side. The second reference level is this lower high, first lower high, right?
Yeah.
So yeah, first lower high. So we are waiting for the reaction on the first lower high. So what happens here? We don't get the reaction, and then we'll miss this entire move.
I have a quick question, Mohammed.
Yeah.
The upthrust, in this one, you can also say this one like maybe JAC, and then the 2 bar down like LPY.
JAC or FTI?
Like JAC, those big
Yeah.
green bars with high green bars.
Okay.
Yeah, this one.
And then
And then it's
sharp
coming
reversal.
back.
JAC is coming back because JAC is turned into what? JAC is actually turned into distribution after this all. After this one primarily.
Mm-hmm.
Okay, so it becomes UT.
It's failed LPY, right?
Yeah, so here I will tell you a trick here. The problem here is that most of the people will say this is UT, but this is actually not UT unless it's close below the point somewhere here. Only then it's a UT, right? So this one is not UT exactly. This entire process is UT, this entire section is UT. Because here the price fell. Now if you go to the 15-minute time frame, now you will see where's the UT. Sorry. Here's the UT, right?
Right.
Yeah.
Right.
Okay. Yeah. So we just go back here. So UT is always formed, remember, once the price closes inside the resistance, below the resistance. Got it?
Mm-hmm.
And we have a high volume or significant high volume on the upside here, right? So this entire will form as a UT. Okay. And now again, obviously, this would be a test.
Yeah.
Okay. So so here, you look over here, nothing special about this one. This one here, yes, we can take this entry, but the point is is it no demand? No. Is it F versus no result? No. Got it? The third bar here at this bar is actually the no demand, right? This could be a potential entry. Stop loss here at this point above the last high. Okay. And then take profit. That's it. 2R finish. Got it? And then the price came back. Okay. Here we have no entry here. Yes. Our third opportunity here again. F was no result. You can see here. Is it F was no result? This one is not F was no. There's nothing special about this bar here. Right? What do we see is just like a very, very small range here. Okay. And this is the first time we got this one, the third entry here after NY3 at NY3. So we got an entry at NY2. We got an entry at NY3 right over here. And we will also get an entry at NY4. Let's see how. So we got this one here, 2R. Got it? Very simple. Because it comes back to the reference line.
Is effort versus no result entry?
Yeah, F was no result entry on the reference line. This one is also on the reference line. Why? Because here, what do we see here? The price tested this region. After upstairs, the price tested this region, right? So we might say, okay, this can be an entry, but here we have no evidence of no demand. Now, don't take this as a no demand. This is not a no demand. Is it a no demand?
No.
The no demand should have volume less than the previous two volume. Got it? This is no demand. This one, yes.
Yeah.
This is where you can take an entry here. This is, if you miss this, this is another entry. Got it? One entry, second entry. And then how about third entry? Of course, after this UT, the price forms what? A small range. Right? And after small range, what is this? The price increasing volume. Can you see increasing volume on the breakout? So this is mini what? This is mini distribution, redistribution, right? Mini distribution. The distribution ends here. Of course, for example, if this is UT here, this complete is UT here. Okay, this, and so this is UT buying climax, right? AR, secondary test, FTI, right? We call this as FTI of the range. And we see the price is coming down and we see the volume as well from this volume as well. Here, increasing, not here, sorry, here. Increasing volume, right? During the down move. And this one, before this one, what do we have here? Effort was no result. So this is all a bearish move, right? And after this, this is NY4 open, right? And what do we see here? The price comes back, retest this region. Makes a first high. You draw a small high here. Now this is what? Again, F was no result. Right over here, F was no result. Or here as well, F was no result. But this is on the reference line. So you just a little bit higher, 2R. That's it. Okay. Now we extend this line further. What happened? You might say it's a spring here and the spring formed here, right? And now we are looking for the retest here. So you might go long. You can say, oh, we can go long. But here, the entire situation is changed. Okay, the price is no longer in distribution, sorry, it's no longer in accumulation phase. Accumulation ended right over here. At this move, the accumulation ended. Got it? Okay, yeah. If this was a perfect accumulation, what would happen? The price would go up, test, reaccumulation, and then go up again, right?
Yeah, that's right.
Do you understand? Okay, if this was a perfect accumulation, what would happen? The price would go up, JAC, and then we would see reaccumulation, and then the price would go up again. So the price would keep on going up, right? But what happened? The reaccumulation failed. And I told you, whenever the accumulation fails, it turns into distribution. Simple as that. So once at this point, the UT observed, when the UT was observed, the accumulation has already failed. So if you're looking for to enter long right over here, you would be doing a mistake. You cannot enter right over here. You have to remove this line. It's no longer accumulation. So the major bias is now bearish. After the observation of, before it was bullish, but after the observation of UT, it becomes what? Bearish. Got it? Just because of one news, the market changed the sentiments. Got it?
Yep.
Right.
Understand?
What I mean to say that you have this accumulation base, let's suppose. Okay? You have this accumulation base. You have this BC, buying climax here. And the price keeps on coming back, going up, back, going up. And then you see the price failed here. It forms a UT here and test here. Okay, and then after that, the price keeps on going down. Okay. At this point, the reaccumulation has already failed. So if you are looking
I
for
think
buy
you meant selling climax, right?
Yeah, selling climax, sorry. It's not selling, buying climax, selling climax. All right. So if you are looking for long position right over here, when the price reaches this point, it's wrong. It's no longer long position. Because here at UT, the accumulation, what was accumulation, has already turned into distribution. Because it has failed. So what will happen? The price will go down. And you might say, you might experience very high volume, like effort versus no result or something over here, but you don't have to take the trade because it's distribution. You always have to move with the bias. Got it? Like, for example, if we extend this line, we can say that there is an evidence of what?
Down.
Effort versus no result, right? People might start entering over here, long here, but what happens? The price fails, breaks down, and it becomes what? Build down, right? It becomes build down. And after build down, what you will see? Test again, it goes down. Simple, got it?
Okay.
So what I mean to say, this accumulation will fail at this point once you observe that the UT has formed and the price starts going down. So you will see the situation many times. And it always happened at AR. The failure of accumulation always happens at AR. So if the price becomes UT at AR, so it means that the redistribution has failed. Sorry, it means that accumulation has failed. The same goes for distribution. Okay. If the price fails at AR during a distribution phase, then it means that it will turn into accumulation. Got it? This is AR, the price forms UT at AR and reverses. So it will become what? So don't wait for the test here. If you are waiting for the test here and and at the test you are entering long, you are doing wrong. You're going against the bias. The bias has been shifted. Understand? Any confusion so far?
No.
Any questions? Okay, so now okay, sometimes like this trading, it becomes like this, right? So you just go here and reset price scale. It will be okay. All right, that's a tip here. Okay, now we go for Monday. Monday, the last one. So who would tell me about Monday now? 17. So what you have to do, the first thing you have to do is to draw. Let's quickly do it. Okay. Monday. So 9 a.m. What's the London open time? 3 p.m. 3 p.m. Okay.
This is Wednesday.
Oh, shit. Monday is this one. Friday. That's Monday, right? Three PM, London Open. And how about the New York Open? The first one? 8:30, right? 8:30. And then we have 9. And then we have this one. And then we have this one. Okay. Okay. So this is London Open. This one is NY Open 1. This is NY Open 2. This is NY Open 3. This is NY Open 4. Okay. Got it? So what do you see before London Open? The bias. What do I see? That at this point here, we have a very high volume, right? On the top. Can you see?
Yep.
So mark this point. It's a very, very crucial point. Okay. This point of accumulation. And after this, okay, what do we see here? The price is at accumulation phase now. Right? Yeah. And this is huge sharp up, right? We cannot draw the channel right over here. But it is what? I told you.
V top distribution.
V top distribution. Got it? V top distribution. Got it? The price is coming down here heavily. And now after the V top distribution, we are seeing again some sort of up channel here. Can we draw a channel here? If you can draw a channel here, this is the last point. First high low is observed from here. If you can draw a channel here, for example, here too. This one is not, it's just at London Open, right? Okay. This is what SOT, right? Let's make it dotted. SOT, and as SOT as your first touch, second touch, at third touch, and you know at the third touch, what do we see? You draw the line here, straight line, right? Any confusion?
No.
So this becomes a testing area. So we have two testing area. Either the price will test this one high one, or it will test this one high. Got it?
All right.
Okay. And now what happens here? So we have the bias. So can you tell me the bias now?
Bearish.
Major bias is bearish at the highs. And if the price fails at the lows, as I told you, then what will happen? And it does not form any, then it will turn into what? Accumulation. So let's see. The price did fail at this point. It did fail. And it becomes accumulation for the Tuesday one. Got it? And then after that, the price failed here and it becomes a distribution. Got it? Hello?
Yes.
Yeah. So any question here?
How is this one distribution? How do we derive?
This is bias. This
I mean,
is a distribution.
bearish.
This is V top. You see, it's V top. We have a high volume, significant. Look for the volume. The first thing you need to do is to look for the volume. That's it. Okay. And then if you can draw a channel, I cannot draw a channel over here. Can I draw a channel? No, I cannot draw a channel here. Right? So obviously, this is what? A one huge move and then a fast reaction to the downside. This is obviously a V top distribution. Got it?
This
You
one
compare
is
the move here. You compare the move here, this move here,
Right.
this move here, and compare with this move, fast move here. Did you see? The
Right.
difference,
Right.
this is a V-top distribution. Okay. So this is mainly, this is bearish, right? So after that, I'm looking for two things. Either I'm looking for the first lower high, but first lower high did not form here, right? The first lower high, the price kept on going up after first lower high. So it did not make any sense here to me before
No.
London Open, right? So now, before London Open, we also see there's a channel which we can draw. Yes, we draw the channel here by connecting these lows. And after the London Open, we see this part here that the price breaks through the channel. But the price did not form any kind of overbought. Why did the price break to the channel? But once we draw this line connecting the highs, we saw this SOT, right?
Right.
So we have an SOT as well here. So this becomes what? Mini buying climax. Mini buying climax. So our major bias is also bearish. Our minor bias, our immediate bias is also bearish. After London Open, you see the price will come back and react to this area. So let's see what happens here. We also draw this line, extend it, okay, which we are drawing this time. Okay, now let's see. Go to the 3-minute time frame and see what we can get out of it. Okay, entry points. Okay. The first part, the price makes the first move, but we did not have a reference point here. If we draw this line, it's a reference point. Here, the price did not reach the reference point, but price did what? It makes a small, very huge high, right? And this is the last reaction to the site. Okay, last time. Okay. Okay, all right. If you draw this channel here, right? Okay, the price breaks through this channel. Okay. Again, the price is going down with this distribution phase, and then there's sudden movement to the upside. Okay, at 8:30, very sudden movement to the upside. And what do we see here? This formed a mini buying climax. Okay.
Right.
So this will form a mini buying climax. Okay. At this buying climax, what do we see here? Testing here at this point, effort versus no result on the reference line. We can draw the reference line right at the top. So yeah, first part. Okay. At NY2 session here, the price came back here. Okay. The price recovered. Okay. And then we have again, what do we have? The increasing bias, right? So this is our major structure here. Okay. If this is a buying climax, it's AR. After AR, the price tested this region. This is a first low, spring setup. After spring setup, we tested here, and then we can go for the second entry or for this one, right? Upside. Got it? 2R. Got it? If this is this one, the price came back and tested the reference line. Okay, both ways. This is the last low. If you draw the line from the last low here, the price made a spring here. And the spring is, yes, a significant. If you miss this part here we can also enter, re-enter, because this is hidden spring. If you see, this is a hidden spring. So we can enter over here and go for 2R. Got it? So that's what. So this is a bullish entry, right? But here, once we reach here, we should stop here, right? Because this is the point of what? Now you might say, just think like this, that this is jump across the creek for this part and test of here. So this is